have the current stock market update for SOFI Technologies Incorporated, stock ticker SOFI. Before we begin with today's chart analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. So as we can see here, this is the 1 hour price chart, which means that each candle on this time frame represents a 1 hour trading period. And as we can see, the stock has now broken above this prior resistance zone that was starting to form right around 1155. Of course, this is in advance of a more long-term resistance zone that we have discussed on this channel quite a bit, coming in at 1170. And, it was clear that the stock was, really having some difficulty sort of generating the momentum that would be needed to finally break above this price zone. So it's a little bit hard to gloss over the fact that there was a major event risk yesterday. We did see the presidential election come, to a point of completion. We did see that Donald Trump easily won the Electoral College. He won the popular vote by a very wide margin, actually. That might be the most surprising aspect of this entire thing. She didn't even come close in the not just the Electoral College, but even in the popular vote. So there are some questions that sort of do need to be raised as far as how a Trump presidency would actually influence this stock, and I do think that there are a few different factors that would be important there. One would be the fact that he is, he has made it very clear that he does want to attack inflation, and by doing that, he has specifically focused on oil markets. The phrase that was used over and over again during the campaign was "drill, baby, drill." So the plan here clearly is to sort of invigorate or speed up U.S. oil production as a way of reducing oil prices and then thereby reducing inflation levels as well. So that can have a major impact, as far as the entire interest rate picture is concerned, because, it could actually prevent the Federal Reserve in some ways from reducing interest rates. I mean, if we do see that inflation levels, are not as problematic. I mean, if these plans do come into effect and they are actually successful and they achieve their goals and everything like that, it does stand to reason that inflation levels could drastically be reduced at that point, because they're so elevated to begin with. From the longer term perspective, I mean, they might not be elevated in terms of the annualized perspective, but that's really just the rate of inflation. That's not the total inflation trend picture that has been in place for these last 4 years. To reduce inflation with oil production could have a major impact here, because if we do see some reductions in those inflation figures, the Federal Reserve won't need to look as closely at keeping interest rates at the current elevated level. I mean, they're extremely high at the moment, and there have been good reasons for that. But if we start to see some more stabilization or normalization in the underlying economy, those same interest rate policy procedures won't need to remain in place. So, and then in addition to that, I mean, Trump obviously wants to be known for having a strong economy during his presidency. I mean, I think that that's, very clear, a clear portion or part of his agenda. And, for the most part, most presidents want the Federal Reserve to reduce interest rates. He might put a little bit more pressure than most on the Federal Reserve. Although at the same time, we do have to understand that these are different governing bodies. They have their own authority and things like that. The president can't simply order the Federal Reserve to reduce interest rates. But it wouldn't be surprising at all to, if there was some sort of, some pressure at least, some constant maybe criticism of the Federal Reserve to start to reduce interest rates, given the fact that, there could be these underlying inflation trends that sort of point in the lower direction based on renewed oil production. So if that does occur, this is something that could help support the stock here going forward. If we do start to see sort of a series or a longer line of interest rate decreases, and this might be more possible or more likely now that a Republican is in office rather than this last 4 years of Democrat control. So at the moment, what we're looking at here, is a share price movement that has created a new high, which comes in right around $12.20. Let's just write that in here. So as we can see, this does now breach through that prior July 2023 high, which came in at $11.70. So, for the most part, we do have to sort of, understand that the stock is still underperforming the S&P by a fairly wide margin. I mean, this is still a 5% difference in that main stock benchmark. So we're still seeing an underperformance here, even though we have started to see this trend movement in the positive direction. I mean, it just still can't seem to catch the S&P 500 for whatever reason. And there are possibilities here that we could see some further price movements to the top side before the end of the year. But we first should look at the indicator readings here because there are some factors to note. One thing that I would point out here is that from a longer term perspective, we are seeing some positive momentum that has developed. We do also have a break of some prior downtrend momentum. But at the same time, there is still a bit of a divergence condition here because this new price high is not being confirmed by the indicator reading itself. So if we just sort of point to this area of the chart here, we can see that prices are making new highs here. We're moving in the upward direction in terms of share prices, but this isn't being confirmed by the indicator reading. On balance, there is still a lot of bullishness in this indicator reading, sort of outside of that divergence. So, it's not completely a negative picture. I mean, you do have several positive factors that are sort of supporting the momentum outlook here. We do have this break in the downtrend momentum, and then this continuation of the uptrend momentum. But it's not. We do have to note here that it's not completely positive. There is still this divergence condition, and that does suggest that share prices could be vulnerable, which wouldn't be hugely surprising because we are starting. We have seen this major movement higher, and then we're also starting to roll over a bit here in terms of momentum. Just into that 1170 level, we were definitely seeing some slowdown there in share prices, contrary to what some people would like us to believe, which was that there wasn't very much resistance at this 1170 level. Obviously, that was not true. Pretty ridiculous statement, but we have broken through here at the moment, and this does sort of unlock now the top side for us to gain access to some higher levels. So now that we have actually broken through this July 2023 high, we can start to look at the stock with a bit more of a longer term perspective. This does sort of assume that we have formed a bottom here right around that $6 area, because this would also suggest that this sort of series of price lows that occurred around $6 would be an improvement based on these roughly $4.30 lows that would have been seen toward the end of 2022. But now that we have broken through this 1170 level, finally, it took some work to get there. But now that we have finally done that, in the videos that follow, going forward, what I will be doing is focusing more on this longer term price movement here, because what's currently happening is we're starting to grind through this 38.2% Fibonacci retracement of this trending move here. So that's what we will be focusing on in upcoming videos. Here's the current market analysis for SOFI Technologies, stock ticker SOFI. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.